Hello guys, welcome to a trading part. We are seeing some bearish price action. On the 4 hours, we're starting to accumulate lots of bullish divergences. And on the daily time frame, once again, we are threatening to break down below support. Signals are getting quite confusing and most people are starting to throw the towel. But in today's video, we're gonna put an emphasis on the past performance of September, not just from the price action, not just from the fractals that are anticipating very clearly what could happen in the upcoming weeks, but also from the point of view of different indicators that have played out in a very similar way 4 years ago in September and also in all the past Septembers. Make sure you don't miss this information because it's really shocking to see how we are preparing precisely the same soup with the same ingredients and people are about to still drink the same crap. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell so you get notified every time I put out one of these videos. Thanks so much for all the likes that you're putting in these videos. So far, we have done like 10 days of 100 likes in every single video, and I think this is the time to step up the game. Can we get to 150 likes in this video? That will be really awesome. Tomorrow, I'm going to be traveling to the south, pretty much the full day I'm going to be driving. If something happens in the market, I will stop the car somewhere, I will check the charts on my iPhone, and I will make sure that you stay informed. Let's get with the content. Let's get started with the daily time frame. As you can see, we are once again testing the level of support. Yesterday, this candle was here below it and it managed to get back above the support. But today, once again, we are repeating the same movement. Price action is not necessarily looking very strong. If we were to close on an RSI below 42, it's pretty much guaranteed that we are going to continue on a trajectory like this instead of continuing to the top of the triangle. We have to wait for the candle close of the daily. When looking at the price action, we are seeing a very similar picture. As you can see, this week in here made it to 55.6, which is lower than that one there. That is giving us already a structure partially broken. Fully broken will be if we don't manage to put a high. Is this red one in here, the daily candle that is in progress, which I'm monitoring closely because it could be the case that once again, it only leaves a week to the downside. But if it was to close like this, it will fully confirm the breakdown. Since we have this liquidity somewhere at the 54K, the price may want to go slightly lower before getting done with this full move to the downside. When looking at the 4-hour RSI, what you can see is that after this collapse in here that took us to 49K, the RSI has been building this channel to the upside. It's very obvious that this is the direction where it's going, but this is happening, interestingly, at the same time with a price action that is putting new lows, new lower lows, and new lower highs. Meaning that the whole price action from the 28th of August has been full of bullish divergences. But as I mentioned yesterday, I do not trade bullish divergences by itself. I prefer to look beyond, so we will focus on other aspects in the chart later in the video to complement this. The open interest yesterday was testing the last line of support at 15.6 billion and it managed to hold, which is good because, as I mentioned multiple times, this area of open interest tends to be responsible for eventually getting us into higher prices. We're also seeing divergences when it comes to the fear and greed index. Once again, today we have less fear at a level of 29, which is just slightly higher than the 26 that we have had 3 days in a row and yesterday's 27. While the price at the same time is going lower. And yes guys, the liquidity at 54 is still there haunting us, but if the price decided to make a swing high, just because it's been for quite a long time in this structure in here, not doing really much, what I mean, if it were to break above this trend line, which currently it's around 58.2, for these small areas of liquidity coming from all the shorts that have been opening here and in here. So the price could do something like this, maybe get to 61, but then eventually I will expect that somehow we need to get to that 54, just because we are too close to that. But if we decided to go for these highs, it might take just a little bit longer to get to the lower liquidity. Later in the video, I'm going to show you some revealing data of what happens typically in September. I'm going to focus on the timing, what happens in the middle of the month, what happens at the end of the month, what happens in the beginning of the month. Make sure you don't miss that. But before, I'm going to show you how much liquidity we have to the upside. If we were to make a drop to 54K, I'm sure we will leave even more fair value gaps to the upside, all of them becoming an incentive for the price and to go and hit them. Looking at CoinGlass, we see the same picture. If you focus on this green curve going up, it's showing you the cumulative short liquidation leverage, which if we just go into 58.4, we already can liquidate 800 million. But if we continue going higher to 62.5, we already liquidate 5 billion, which is mind-blowing. Going into 66 liquidates 8 billion. Now to the downside, there's not much apart from 54.5 and 55.5. And I remind you that the liquidation levels on that chart are only of the past 30 days. And if we go 30 days back in the past, that is ignoring any liquidity that could come from this swipe that we did to 49K. In fact, 47 to 46 is the largest chunk. You can see on FAR charts that we have some cushion at 50K and a relatively similar liquidity above the price at 65K. On Binance, the buying liquidity below the price continues to be located at those prices we just mentioned. And now I want to focus on the timing in September. What you're going to hear is quite revealing. I was just trying to compare each September in terms of price action. And if you just ignore this September, which was already in the bull market, all the other Septembers have a few patterns, almost like a fractal, which I'm sure we can use in our advantage. Let's focus on 2020. What's going on in here? Pattern number one. You can see that there is a spike in the price. And as soon as we land in September, there is this sell-off. I remember that around here, we had the delisting of XRP, SEC called it a security. That was the excuse of the day. But pretty much every September has some bearishness in the market, including the ones in the bull market. So apart from the pattern of the dump into September, we can also see that as we progress into September, the price starts going higher. Around the 18th of September, it reaches a peak. And then we see a drawdown of around 8%. This line in the middle of the box is going to be always the end of September. So we have the second half in here of the box, which represents October. And what you see in October is that the uptrend is a lot more pronounced, and it also produces a higher high relative to where we were in August. So now try to memorize those patterns and let's continue going into the future. Now we're going to look into the second half of the bull market in 2021. The context is that we found a bottom at 29.8K. We had a rally, doesn't follow the previous pattern, but we're still going to highlight the most important movements. We have a move from early September going higher, then a dump, then we have another small rally and then a second dump. At the end of September, we hit bottom, and in October, no one can wait anymore and things start pushing higher very quickly. The patterns I want us to remember the most are the ones from this August, because that August is the equivalent that we have relative to the halving event right now, precisely 4 years back in the past. Now we're going to look at what happened in 2022, September. This is almost the end of the bear market. You can see, once again, August goes higher. Into September, we dump around 13th of September. This time it's not 18, but still, halfway September, some sort of rally that dumps into 18K, and then we get a final rally into October that makes 16%. It looks very shallow, but still it's a good decent move to the upside. But then what happens? We get the FTX crash, which happened in November. That is the end of the bear market and the beginning of the bull market. If we focus on the most recent September, we're going to see very similar patterns. In August, from the top, a dump into September. We start September from 25.8K and we get one rally into 27.4. That happens on the 17th of September. So you can see that September starts from low. You go into the middle of September going higher. And then you have a final flush, this time of just 5%, not 8% like 4 years ago. Remember that this is a bull market, so it's not necessarily comparable, but I still see these patterns of having a small rally into the middle of September. So if we were now to draw in this box what could happen in September, so far we are repeating the same. We come from August from a high price, we dump into September, we find a low at 55.6K. We should be expecting to see some sort of rally, maybe possibly into 60K. But then towards the end of September, we should see a flush of about 5 to 8%. Starting with October, we could see a small move to the upside like this, or we could see just an explosive move. This is not a forecast. This is just showing you a mix-up of all the previous performances of September in a chart and putting more emphasis on what happened 4 years ago, which should be equivalent to what's happening right now, time-wise. And you might be thinking that the analysis ends there, but I have a bunch of extra points to put together with this that are really mind-blowing. If I show you all these other indicators from High Block Capital, we can now see the market with a different perspective. Not just the price action, not just the fractals, but we can also focus on funding rates during this period. We can focus on how many longs and shorts we have. We can focus on the signals that are triggering early in September and the fear and greed, which we are currently in. So let's compare this a little bit from the distance. And I think the one I want to compare right now is the previous September with the current September. And what you see here is all these green signals in here showing you that the longs remain above the 70 mark, and we are precisely seeing the same behavior of the longs. Number two, we see that the funding rates become really negative, which correspond with this attitude of people trying to short September. Everybody gets bearish in September and they build up more and more short positions. Too many shorts. There's an imbalance which puts in risks the shorts. If we look into the past, we're going to see the same green signals in this September and the funding rates in the negative in here. Unfortunately, when we go too much in the past, we won't see the same data. It could be that High Block Capital didn't manage to capture all that data so long ago, and that's why we are not being able to compare 4 years in the past. But to me, just seeing 2 Septembers in the past with these signals at the right time in September, with funding rates and also with the fear into the red, it's already good enough to understand that we are kind of building up the same recipe for a bullish October. It doesn't guarantee it, but it increases the chances and our confidence. And a very quick update on the ratios and spread charts against Bitcoin. We have the VIX1, we have the Federal Reserve's liabilities, we have against the Nasdaq and against the DXY. You can see that VIX so far with this candle in progress this week is faking out. This is something that can be undone during the week if with the rest of the days until Sunday, we were able to push this RSI back above the trend line. It looks like a tough thing to do at the moment. And if we were to close like this, we're going to have to move eventually the trend line slightly above it. and say that that was a rejection from resistance and look for a breakout later on in the next months. On the Federal Reserve, we have the same thing, but we actually had it 1 week before. The Nasdaq never broke out, so it's still in the area of defining what's going to be the point of break. It's worth noticing that we are holding this level of support in there, which corresponds already with this area of the price. And on the DXY, again, we faked out in a similar way. So 4 out of 4 charts faked out, and we're continuing to look for a breakout later on in the upcoming months. I will keep you updated on Twitter. Make sure that you follow me. My handle is Trading Parrot. As soon as we get these signals, I will share it on Twitter. And it's pretty annoying whenever you see a signal faking out, but I made sure that when I publish the video, I explain that it's quite typical to see fake outs like this one that you see in the chart that you need to reaccommodate, but every time that you see a fake out, the RSIs are going lower. The next time that you attempt the same move, you increase the likelihood that it's not going to be a fake out. You just need to arm with patience until one of these breakouts becomes successful, and then the returns from these things are just mind-blowing. So it's totally worth, in my opinion, to continue monitoring these signals. And the same goes with the green signals that we are having in here. You can see that it has triggered 1, 2, 3, 4 times. And we are already preparing a 5th signal for a buy. In the previous September, we had 1, 2, 3, 4, 5, 6, 7, 8 signals. And the price went just sideways pretty much. Eventually, we didn't get any signal. The price continued to go in sideways for about 35 days, and eventually it made 180%. So you decide what to do with the signals. I've been very clear what I'm going to do, and I continue thinking in that way. We've seen a huge selling pressure when it comes to the ETFs. Yesterday, slightly less, which is promising, only 37. But the day before, we had almost 10 times that, 287. And in this chart, it's pretty evident that we are in a drawdown at the moment in terms of accumulations, cumulative from all the different spot ETFs for Bitcoin. Still, we don't see a depression as big as the one we saw on June on 2024. But I still see the green line showing the totals in the middle, putting higher highs and higher lows. Guys, currently I'm hosting a position airdrop. You trade with $100 and they give you additional $500 to trade for free. You can trade any of the coins in this list in the screen. I left a link at the top of the description that you have to click to activate and to see the instructions. You can also find a referral link to open a new account on Bybit, which can unlock up to 30,000 in rewards, and it can make the subscription to the TTP website for free. Any of these tiers that you can see on the screen, which gives you access to hundreds of indicators I have built throughout the years to help you navigate the market, to backtest strategies, and different pro tools that you can use to trade with bots. If you're interested in learning more about bots and strategies and browse a little bit, what do we have to offer? Make sure that you're joining my Discord server and go straight into the strategies forum. Have a look at all the different strategies. I'm sure that you will find something interesting to use for your trading. Thanks so much for watching. See you in the next one.